All right, greetings. So first of all, let me just say I want to thank you for taking the time out of your day to watch this video, and hopefully you learn something from it. And if you do learn something from it, I would definitely appreciate if you subscribe to the channel and also like the video, and also hit that bell that will allow you to be aware of when I post new videos in the future. So I put on this trade. I recorded a trade that I put on yesterday, a options trade, and I'm going to walk you guys through it. So let's get into it. All right, so I'm going to start the recording here. So this was put on yesterday. I put my first position on, and I'm going to stop the recording right here. So essentially, again, I've been trading the SPX, right? The SPX, which is the ticker symbol that represents the S&P 500. And so I've been trading that for the last month and a half because of the volatility that's been in the market. And so I've been getting in and out of my XPX options positions on the same day. Okay, so I put this position on. As you can see here, the expiration date was the day I put the trade on. I sold a put credit spread. So I sold the strike price of 36.15, right? And I bought the strike price of 36.05. So that creates what they call a vertical credit spread in the world of options. So anytime you see a negative sign on the number of contracts, you know that means I actually sold that strike price. And when you see a positive number, that means I bought. So again, so a vertical credit spread is the simultaneous buying and selling of option contracts. All right, so I'm gonna let the recording run here. And yeah, let me stop it again. So the reason why I decided to get into this vertical put spread is because, and also shout out to my guy Stephen Brooks, who sends me daily levels of the SPX. And so those levels give me an idea of where there should be support for the SPX and where there should be resistance, all right, for the SPX. And so one of those levels that was in the email that my guy Stephen Brooks sent me was at the price point 36.51. Let me just check that right here real quick in my notes. It was 36.51. So 36.51 was a level that when the SPX reached that point, that price point, then theoretically buyers would step in and start to increase the value or start to buy the SPX at that particular price point. Hence, that's a level of demand. So anytime the price of SPX gets near that 36.51 price point, that means that theoretically I should anticipate that the price is going to start to come back up. And so as a result of the SPX being close to that price point, obviously we can see the actual price here, 36.52.89. I decided to get in on the put side and sell a vertical put credit spread. So take in money with the anticipation that the price of SPX was going to basically stay here or reverse and go back up in value. And oh, by the way, I don't know, well, my logo was blocking it, but I'm actually looking to put on a vertical credit spread as well. I'm looking to sell the 37.10 and the 37.20 on the call side. So I'm looking to put on an additional call credit spread on the call side. So you got calls and you got put options. Okay, so I'm gonna let the recording run here, and eventually you're gonna see that I'm gonna get filled on my vertical call credit spread. All right, so I got, see there, so now I got filled. Let me just stop the recording. So as you can see here, I got filled on the vertical call credit spread as well. So I sold the 37.10 call option, and I bought the 37.20 call option, and I sold essentially, 3 contracts. So essentially I have a symmetrical iron, what they call an iron condor in the options world. And so my vertical call credit spread is equal to my vertical put credit spread. So they both have the same strike price width, right? So this here 37.10, 37.20, the width is 10, and then the 36.15 and the 36.05, the width is 10 as well. And then each side has 3 contracts, so it's a symmetrical iron condor. And so selling that additional vertical call credit spread allows me to take in more credit. And so at some point you'll see what the total credit that I took in is. So as you can see, I took in $270, and so right now the P&L was in red, is negative, because so an option contract is a depreciating asset, meaning just like a car, the more you drive a car, the more the value of that particular car depreciates, right? So with an option contract, the closer you get to expiration, the more value your position loses. And so considering that I am putting the position, or in this case positions, on the day of expiration, the value of these option contracts or these option positions immediately begins to lose value. And as an option seller, that's what you're looking for, because when you sell something, when you sell an option contract, in order to close it out, if you don't allow it to expire, and if you close it out early, you want to close it out, you have to buy it back. So when you buy it back, in order for you to make money, you got to buy for less than the credit you receive for selling an option contract, right? So if you sold an option contract for $100, you want to buy it back for less than $100, right? So if you buy it back for $50, then your net profit is $50. Okay, so I'm letting the recording run here. And so, yeah, and so as you'll see, so I recorded this trade throughout the day, and you'll see that as we get closer to the end of the trading session, and so the market opens at 9:30 a.m. Eastern Standard Time, and it closes at 4 p.m. Eastern Standard Time, right? So, and some people don't know that. And so as you can see here now, because it's later in the day, so it's now 2:27 in the day. I'm getting closer to. So remember, when I put this trade on, the expiration date was that actual day, September the 26th, right? So as I'm getting closer to the end of the trading session, or 4 o'clock, the position or positions are losing value. And so because they are losing value as an option seller, my P&L is actually increasing, and P&L stands for profit and loss. So my P&L is actually increasing in value, which is what I want to happen as an option seller. Okay, so the trade is running, the recording is running. And so again, so the objective is for the price of the underlying. Let me just stop this real quick. So the objective of this trade is for the price of the underlying, and the underlying is the SPX, is to stay above my short strike on the put side of 36.15 and my short strike of 37.10 on the call side. So as long as this price, or as long as this circle, which represents the price of SPX, is in between my strike prices, when the market closes on September 26th, which was yesterday at 4 o'clock, then I'll walk away with the entire credit that I took in, which was $270. $270. So anytime you hear folks talking about, the market is crashing, it doesn't matter, because as an option seller, I can make money, options buyer or option seller, but I primarily sell options. Okay, so it doesn't matter if the market is crashing, or it doesn't matter. I can still, or you can still make money if you understand how to trade options. So it doesn't matter which direction the market is moving in. All right, so I'm letting the recording run here. And again, so the position is exactly where I need it to be. Okay, so now we're at roughly 3 o'clock in this trade, and as you can see here, again, let me just stop it right quick. So as you can see here, the P&L, as I'm getting closer to the as we are getting closer to the 4 o'clock hour, when the market closes, my P&L is constantly increasing in value, right? So right now, this was 3:08 when this recording took place. If I wanted to close out this trade, I would walk away with $180 of the $270 that I took in. So that's roughly a little over 66% of $270. But I'm going to allow, but I allowed this trade to expire all the way until 4 o'clock because I wanted the entire $270. And the fact that the price is exactly where I need it to be, it's right in between, my short strike on the put side and my short strike on the call side. I'm not in danger of losing any money, so I'm just letting the trade run its course. And so we're at 3:33 now, so roughly 30 minutes before the market closes. As you can see here, my P&L has increased further, so now I'm up to $243 of the $270 that I took in initially when I put this trade on. And so again, I just let it run because the price is right in between, my short strike on the put side and my short strike on the call side. So I'm just letting it run. And this is the beauty of understanding how to trade options. Again, as I mentioned before, doesn't matter which direction the market moves in, up or down, if it's crashing. Matter of fact, if it's crashing, if it's falling rather quickly, these premiums would actually inflate. And when you start selling options, you can make even more money because the volatility in the market would be extremely high, and the amount of money you can make for selling options increases significantly. So we're almost at the end of the recording here. So yeah, so there's about 5 minutes. So as you can see here, so now it's 3:54 when this recording took place. And let me just go back a little bit. As you can see here, I pretty much made the entire 270 at this particular point because all of the value has pretty much been exhausted from my positions. And so as a result, I've made the entire $270 at this particular point, and the recording is almost over. So yeah, again, understanding how to trade options, can allow you to make money regardless of which direction the market moves in. It's a very invaluable skill set to have, and I always tell folks, man, one of the best things that one of the best skill sets that I believe, in my opinion, that someone can acquire is the ability to learn, the ability to trade and to make money from the stock market by trading options or trading stocks. It doesn't matter, because you can make money in either direction trading stocks as well. So it's just understanding, the type of skill set that one must have trading options versus trading stocks. So hopefully you learned something from that video. Again, if you did, I definitely would appreciate you, subscribing to the channel, hitting the like button, and also hitting that bell so that you will be aware of future video postings. Thank you. Have a good day.